Hello, everyone who has joined. It's about a minute of 2. We're going to give folks a couple more minutes to get in the room, and then we will get things going. Thank you very much for joining. Hello, I will say a very warm hello to everyone. It's a little after 2. Thank you very much for joining for our webinar today. We're going to give folks another minute to join, and then we will get things on the road here.
Peter, you need some background music.
I do. Yeah, I need a good soundtrack here. I'm in Philadelphia, so I could always play the Rocky theme.
There you go.
Folks who are joining, if you want to go ahead and say hello, and in the chat, just say where you're coming in from, that would be great. Okay, all right, I think we're going to get going. We've got a really nice crowd, and we want to keep things moving. So I thank everyone for joining. Please sit back, grab a glass of water or your favorite beverage. It's 2 o'clock Eastern time, so perhaps a mid-afternoon snack. And very much hope you enjoy and you learn more about QCash. So I am Peter Rubenstein. I am Inclusiv's Director of Technology and Innovation. And I'm joined today by QCash CEO Seth Brickman and Intera Credit Union's Chief Strategy Officer, Dave Berkey. And we'll be having a discussion with Dave later about Intera's small dollar lending journey. After our presentations and discussion with Dave, there will be time for us to answer questions from attendees. So please use the Zoom Q&A section at any point during the webinar to submit your question. So we are here today to talk about Inclusiv's inaugural Innovation Spotlight Partnership with QCash Financial. The Innovation Spotlight Partnership Initiative is associated with Inclusiv's Innovation Council, which is composed of technology leaders from community development credit unions. The mission of the Innovation Council is to identify, evaluate, and promote innovative products and services that enable community development credit unions to increase financial inclusion in underserved communities. If you are indeed interested in joining the council, please definitely reach out to me after this webinar. I would love to hear from you. And we want to thank Prudential for their support of the Inclusive Innovation Council and the Innovation Spotlight Partnership Initiative. So to put this partnership in context, after receiving feedback from our Innovation Council members that better small dollar lending solutions were needed, we decided to focus on finding a solution that the vast majority of our members could successfully implement and support. The ability for our members to offer safe and affordable small dollar loans is important to Inclusiv because small dollar lending is a major equity issue. And that's supported by and demonstrated by these charts, by data from the CFPB and others that clearly shows that users of payday loans and other alternative financial services are disproportionately Black, brown, and poor. And the use of predatory lending products keeps individuals from improving their financial health and prevents communities, many of whom are served by our members, from flourishing. So we're very excited to be working with QCash for this, as I said, inaugural Innovation Spotlight Partnership. And here's why. QCash allows community development credit unions to automate their small dollar lending process, enabling them to offer financially sustainable small dollar lending products to your members with underwriting that does not rely on a credit pull. And of course, affordable and safe small dollar loans allows CDCUs to take on predatory alternative financial service providers that are ravaging many communities. We also like QCash because, well, quite frankly, they were born out of the credit union world. They're a QSO, and they understand deeply the needs and challenges, especially around technology, that credit unions are facing, and they offer a low maintenance technological solution that can help credit unions overcome these challenges with an easy to use user interface that guides your members through the loan application process. And you're going to learn much more about that during Seth's presentation very shortly. Finally, it's important for me to note that through our Innovation Spotlight partnership with QCash, Inclusiv members that have not yet engaged with QCash are eligible to receive substantial discounts on implementation and use fees. And with that, I'm going to go ahead and hand it off to Seth, who will guide you through QCash Financial.
All right, guys, thank you so much. We really appreciate you taking the time to talk to us today. You know, one of the great things about being part of QCash is not only do we get to hear from credit union executives, but we also get to hear from credit union members. And you guys are hearing the exact same stories that we're hearing. So whether it's Laura Kelly, who's broken down on the side of the road at 10 o'clock at night, and the tow truck shows up to bring her car to the shop to get fixed so she can go to work the next day, but she doesn't have the funds to pay the tow truck. Or Camille Aragon, who wakes up at 2 o'clock in the morning and finds her dog is very sick. She takes it to the emergency vet. The emergency vet says her dog needs surgery and she has to prepay the estimated amount of the bill and she doesn't have the funds. Now, what's interesting about these two members is that they were part of credit unions that partnered with QCash Financial, so they were able to get the help they needed. But they're actually not alone. Next slide. In fact, the Financial Health Network tells us in their annual financial pulse that 167 million people struggle financially. 2 out of every 3 are financially unhealthy. 1 in 10 credit invisible, meaning they don't even have enough of a credit file to generate a credit score so that they can be eligible for traditional lending. And then the one that continues year after year is that 40% of Americans would struggle to handle an unexpected $400 expense. And it's really not a matter of if they're going to have that expense, but it's when they're going to have it. And when they have it, where do they turn? And that's really where QCash comes in. Like Peter shared, as a QSO and as founded by credit unions and only servicing credit unions, we want those members to come back into the safety of the credit union to get the help that they need. Next slide. In fact, Washington State Employees Credit Union recognized it all the way back in 2005 when they created a product for their own members. And within a short period of time, they were doing thousands of loans a month. So in 2015, QCash Financial was born as an independent QSO, again, owned by credit unions, only for credit unions, to help credit unions combat the issues and deal with those life events that their members are having. And in fact, in partnership with our credit unions, we funded over 700,000 loans. And when I say in partnership, that's because the credit union owns the loan and the credit union services the loan. We are merely the technology platform that allows it to happen. On the right-hand side of the screen, you can see just some of our current partners. In fact, we go from the western tip of Washington State all the way down to the southern tip of Florida with everything in between. So we are so glad that you're here. Next slide. Now, we have some really core partners. And the first thing when I say core, I actually mean your banking core. And so we integrate deeply with your banking core. And what that allows us to do is completely automate the loan process. So we will write the loan to your core, we'll write the GL entry, we'll write the auto payment schedule, and we fund the loan. So we are deeply integrated with all of these different cores that are going to allow you to create and give a loan to your members in under 60 seconds with no interaction from loan origination personnel, completely digital. And if you are on a core that you don't see listed here, please reach out to us because we are adding new cores all of the time. And then we also have strategic partners, obviously Inclusiv, very strategic, very important because they are as mission driven as QCash is. And that is so important to us that we are out there helping credit unions. Aloya Corporate Credit Union, CUNA Strategic Services that manages our state credit union leagues. And then we're part of the CU DeNova Collective, and Denise on the call is a big part of that as well. And we're trying to help start new credit unions and stem that tide of losing one credit union every single day. But I know your biggest question is what exactly is the QCash platform? Next slide. And so the QCash platform is a cloud-based white labeled solution. So what that means is your members will go to your credit union's website and your mobile app. They're not going to a third party. All they know is I went to my credit union and I got the help that I needed. And when we say fully customizable, what that means is every word, every color, every font, every screen is customizable to look like your website, your mobile app, your personas. And then the other part of the customizable is each loan is completely independent and fully customizable. So you can have different underwriting criteria. You pick the interest rates you're going to charge for the loan. You pick whether or not you charge fees. You pick what the underwriting criteria are and what your risk tolerance is. And because we have digitized the process, they're available to your members 24/7, anytime, anywhere. And in fact, our two big claims to fame are your members will go from clicking a link saying, I want a loan, to actual funds in their account in under 60 seconds. And we do that all using relational underwriting. We don't use FICO score. We don't do a credit pull. Next slide. In fact, from a high level, what relational underwriting really is we're going to look at several things. We're going to look at some things like, are they a member in good standing? And so there we're going to look at, are they over 18 years of age? We do two different independent checks for the Military Lending Act because we want to be fully in compliance with the Military Lending Act, but we even look for military spouses and military dependents. And then we look at how long have they been a member of your credit union. And this is one of those variables that you are in control of. So you might say, I want them to be a member for a minimum of 60 days before we'll give them this loan. And a lot of our credit unions do choose that 60-day number, but I've got one credit union that chooses 180 days. Now, across our entire portfolio, we have an under 5% charge-off rate with an over 5% return on asset. And again, the majority of them are doing somewhere around that 60 to 90 day period of membership. We look at member eligibility. So we look at, do they have any delinquencies? Do they have charge-offs? Do they have any codes within your core that would act as red flags or cause us concern? Do they have any bankruptcies? And this is, again, where you're in full control. So you might say if they've had a bankruptcy in the last 6 months, they get declined. But if it's over 6 months old, we'll approve them, but they're going to get a lower amount of loan. And if it's over 1 year old, then we won't even look at it. So again, every aspect of our platform is going to be completely controllable by you. We look at their deposit history, and we use that deposit history as a proxy for verification of income, and we use it as a proxy for ability to repay, because we would never put a credit union member into a loan that they wouldn't be able to afford. And then where our data science really kicks in is in the credit union relationship. So one of the things we really look at is what other products in the credit union is the member using. And what our data science shows is that when members are using multiple products in your credit union, they have a higher correlation or a higher propensity to repay that loan. And so, do they have a car loan? Do they have a mortgage? Do they have a credit card? Do they have a personal loan? Do they have multiple accounts? And we're looking at all of those things, and all of those things actually come together and they create what we call a relational underwriting approval or decline. And then we're able to get them into a loan and get them the help they need to deal with that life event. And one of the beautiful parts about relational underwriting is it really takes credit unions back to what I'll call the old days, where you actually gave loans based on your relationship with the member. And what it really allows you to do today is to mitigate the risk of a loan, but also allow you to say yes to members you're currently not able to say yes to before. So it's really driving your ability to impact your community. Next slide. And so when we talk about our product, what we're really talking about is the loans that you're going to build out in your core. And we actually recommend you build out 3 loans into your core. The first loan is a life event loan. That's kind of what we kicked off the webinar with, where your members are dealing with accidents or illnesses or pet emergencies, refrigerators breaking down, cars breaking down, more month than money, right? And so this is the first loan, and this is a loan that you're going to have live 24/7 around the year, and it's going to help those members when they're actually in a time of need. Remember, our platform, our product will allow you to help a member go from clicking a link to real money in their account in under 60 seconds. So not only are you helping the members that you've been declining previously, you're helping them when they're in the middle of that life event. So you are really driving a great member experience. Now, what our research also showed is that credit unions are absolutely amazing at offering calendar-based loans. So credit unions are known for summer vacation loans and winter holiday loans. And the reality is that members who don't have a credit score that qualify for traditional lending don't have any less needs. They still have those exact same needs. So we created a specialty loan product. So this is going to be a separate independent product that you can create your own underwriting criteria for, your own loan amounts, completely different from the life event loan. And you're going to repurpose it throughout the year. So in the summer, it's a vacation loan. In the fall, it's a back to school loan. In the winter, it's a holiday loan. In the spring, it's a tax relief loan. We had a credit union do an Amazon Prime Day loan. We had a credit union in Florida do a 3-day Black Friday loan. And in those 3 days, they tripled their average monthly volume. And that's the reality of the situation for us and for you, is your members need this help. The Financial Health Pulse Network data tells us that 2/3 of Americans need this kind of help. And the reality is they're going somewhere else when the credit union doesn't have something for them. So we just want them to come back to the credit union. But the other loan that we're really excited about is our financial first responder loan. And what that loan is that's a loan you're going to build out, but it's not always going to be live. In fact, you're going to keep it hidden until some sort of catastrophe or disaster happens in your community. And then the beauty of this loan is because it's already built in your core, All you have to do is turn it on. So imagine you as a credit union being able to respond to the needs of your members within minutes, not days, not weeks, not months, but minutes. So an example is, I know I saw some people from Oregon. One of our Oregon credit unions, when their wildfire evacuation order was issued, went live with the wildfire evacuation loan. And so imagine whether it's a tornado or a hurricane or a typhoon or a major employer in the area does a layoff or the government shutdown. But imagine you as the credit union actually being that financial first responder, that you go and you turn on that loan, again, independent loan criteria, and you're able to help your members within minutes of that catastrophe happening. You will be the only financial institution able to do that, and you are really going to create an incredible experience for your members. And what these loans do is they make your members what we call more sticky. What happens is you're helping them in a time of need, and they don't forget that. So when they need other things, you are the first group that they come to. In fact, we know that members who receive QCash loans are typically using more products in the long run at the credit union and have an overall higher lifetime value. And then the last product that we've got is a pre-approved loan product. So depending on your core, you could be able to give us a list of your pre-approved loans. You do whatever pre-approval process you're going to do, soft pulls, however you want to do it. You put that list into the QCash platform and we can deliver those loans digitally for you. So what that does for you is it allows those loans to be fulfilled 24/7, and it doesn't require loan origination personnel. So, you know, all of these products together give you a very strong response to predatory lending, but really what it does is it gives you a very strong response to the members that live in your community that need the help. Next slide. So, in summary, the member benefits, contactless and frictionless. So the number one thing that we hear from members is they love the fact that they didn't have to go into a branch, look somebody in the eye, and say, I need help, right? They're able to get the help they need when they need it because the platform is available 24/7. In fact, what I like to say is we actually designed the user experience to be done by somebody broken down in the side of the rain or side of the road in the middle of a thunderstorm, waiting on a tow truck. So when you look at our platform, all your members are doing are accepting the loan terms through e-consents, which is opting into checkboxes, and then we are going to give them the loan. And the unique thing about our product is your member doesn't actually tell us how much of a loan they want. We tell them how much of a loan they qualify for. And that's really important from a member experience. The reasons for that are if a member comes to you and says, I want a $2,000 loan, but they only qualify for a $1,000 loan, you really have two choices as the credit union. You have the choice of declining them, or you have the choice of giving them a loan for $1,000, to which their typical response is, but I told you I need two. But what's really interesting about that is when you remove the question of how much of a loan do you want, and you just give them a congratulations, you qualify for $1,000, they're actually happy that they got the loan to begin with, and it doesn't create a negative user experience. And the fact that they're doing it in 6 clicks in under 60 seconds without credit score, and that the funds are immediately in their account ready to use, just creates an outstanding member experience. And then lastly, it's going to help your members build good credit. Because this loan is in your core, you're going to report it just like you do all your other loans, which means when you report it, it's going to help your members build good credit because the credit bureaus are going to see a paid off loan. And so it really works well for your members. And we're one of those few platforms where our goal is actually to get your members into your traditional lending and out of this product. But for you as the credit union, it supports the credit union mission of people helping people, because you're now able to say yes to those members you weren't able to say yes to before. It facilitates financial inclusion. You saw the data that Peter showed in the beginning, and the data really drives, there's a lot more data behind that, but it actually shows that minorities are inequitably impacted by payday lenders and by predatory lenders. And so the ability for us to get groups back into the credit union in the safety of that credit union and get the help they need in a very responsible way. And the fact that you're saying yes to members you're saying no to, it's really going to generate financial inclusion. And the other thing is our platform supports ITIN lending and it supports Social Security number lending. So again, you're generating financial inclusion by being able to give loans to people that don't have Social Security numbers. Each loan fully customizable. So each loan can be completely independent and different from the other loans. If you wanted to have 10 different loans, you could have 10 different loans. Of course, relational underwriting means, and automated origination means we don't need your loan origination personnel to get involved in these loans, so they can actually work on higher value items for you. And then I meet with the regulators regularly. In fact, in the last 2 months, I've had the pleasure of meeting with Rodney Hood, with Kyle Hoffman, with Chairman Harper. And Rodney's actually going to be setting up a meeting for us to run his examiners through this QCash deck so that they understand QCash and that they can make sure that when they go into a credit union that has QCash, that they see that as a huge positive. And then lastly, which I know is really important for Inclusiv, we're CDFI approved. And what we mean by that is if you are a CDFI credit union, you can use CDFI grant money to not only pay for the implementation of QCash, but also to create a loan loss reserve against your charge-offs. So if you decided you wanted to give as many loans as you can and you were comfortable with a higher charge-off rate, knowing you have CDFI grant money as a backstop, you can make even bigger impacts in your community. But again, you have that capability. And QCash, from what we hear from our CDFI partners, by having our program also helps you get CDFI certified and maintain your CDFI certification because it really shows your commitment to helping the community. Next slide. So when you sign on with QCash, a couple things happen. Number one, we put you into our implementation queue. A typical implementation takes about 10 to 14 weeks. Now, there are a lot of variables around that, such as who your mobile banking provider is could be a big variable. As most of you know, mobile banking providers, you have to submit a ticket. That ticket has to get prioritized. Then they have to do the work. And the only work they're doing is aligning your SSO to our platform. And so we use your SSO as our member authentication because you're using it to authenticate your members. And so that work has to get done. It's not hard work, but it's just getting it in the queue. Our marketing team, which of course Denise heads up, they're going to work with your marketing team. And Denise and her team, they're going to help you create a launch campaign. And they're going to help you create a name for your products. So, we just had, for example, Seattle Credit Union, which is an Inclusiv member, go live with the Lightning loan. And so we want you to come up with a fun, great name for your product that's really going to help people in the community remember what you've got. And then they're also going to help you with sustained awareness campaigns, because what you're going to see in a little bit is that creating that awareness is going to be the key to your success. Our client success team, they're going to meet with you monthly. They're going to provide all of the data and insights around your program. Now, that data is also available to you anytime you want it. So you can do a manual pull of that data. You can put it into your own analytics systems, or you can put it into your own dashboards. But our client success team is going to do that analysis for you as well. Meet with you once a month and make sure your program is accomplishing the goals that you set out. Heidi, who heads up our client success team, she was actually with Washington State Employees Credit Union when they created this product. So she has been with the product since 2005. So she knows exactly what you need to do from a best practice perspective to be able to make sure you're hitting your goals. And then for those of you that don't want to talk to a client success manager, we offer Zendesk. So you can online put in tickets, ask questions, do whatever you want, and we'll respond to you that way. And then we do focus groups. So we bring in our credit union partners and we listen to them. We understand their pain points, because at the end of the day, what QCash really wants to be about is solving the big issues you're dealing with, helping you make bigger impacts, and helping you be successful with people helping people. So next slide is our marketing slide. And on the left, you'll see some of the professional collateral that Denise and her team create for our credit unions. Again, we create tons of incredible things. In fact, we also have videos, and one of our videos, a Florida credit union used and bought a 30-second TV spot and saw an incredible response from it. And so all of our collateral is going to be professional, high quality collateral, and it's collateral that you can use online, but we also have collateral that you can use in branch to create awareness. But awareness is really the key to the success for your credit union. Your members, if they don't think you have a product for them, they are not coming to your credit union for help. They're going somewhere else. And so creating that awareness is going to be key. We like to tell a couple quick stories. One is in Ohio, where we had a credit union go live with our product. They sent one email to their membership and they saw a 500% increase in loan volume just from that very first email. They were blown away by the numbers because that meant every single one of those families were going outside of that credit union to get the help they needed. We saw a very similar response in Oregon when a credit union in Oregon who had actually had our product began doing marketing and creating awareness, and they saw a 628% increase. And so creating that awareness to your members, that's going to be key, because once they know you can help them, they will be, I'm going to say on your doorstep, but on your app step, getting the help they need from you. And then we already talked about the Florida credit union with the 3-day Black Friday loan. So super impactful, really great opportunity for you to help your community. Next slide. So that's kind of it. Together, we can help you help your members get the funds they need when they need it, 24/7 and in under 60 seconds. Now, one of the things I would love to encourage you is Peter's going to share a way for you to reach out to QCash, and we would love to give you a demo of our product. Now, the good news for our demo is if I'm going to tell you a member is going to go from clicking a link to funds in their account in under 60 seconds, the demo lasts about 60 seconds. If I talk too long, it might last 90 seconds, but it's a quick demo. You're not going to have to buckle up and settle in for an hour like a lot of fintech demos do. But we would love to show you the product and show you how exactly what your members are going to see and exactly how you're going to be able to help them in a time of need. So with that, I am going to pause and hand it back over to Peter.
Great, Seth, thank you very much. And as Seth said, we will be displaying contact info for QCash. Please definitely reach out to them if you need more information, if you have questions. Of course, if you have questions, please do feel free to ask them today. I see a few people have their hand raised. We will be able to unmute you during our Q&A, or you can submit your question into the Q&A function in Zoom.
And Peter, I see a lot of people did actually submit questions in the chat box.
Yes, we'll be sure to check there as well. Thank you. All right. So I am delighted to be joined by Dave Berkey, Intera Credit Union's Chief Strategy Officer. Dave, before we dive into questions related to your experience with QCash, can you tell us a bit about Intera?
Absolutely. Thank you very much, Peter. Yeah, we're about a $1.6 billion community chartered credit union in northern Indiana. Our base is agricultural, and we do a lot of business loans. What we've been working at is trying to find a better way to rediscover what it means to be purpose-driven, and to really get back to some of the founding principles of why credit unions were started in the first place. And QCash has been a critical tool in that financial inclusion journey for us.
That's great, Dave. Thank you. So some questions regarding QCash specifically and your journey. Why did Intera invest in technology to begin with to address the need for small dollar lending?
So for us, this grew out of a Harvard Business School course we did on sustainability through Callahan and Associates that really did help us rekindle this idea around what it means to be a purpose-driven organization. And the larger you get, the easier it becomes to focus on key performance metrics, and growth targets, and to forget some of what it means really to help everybody in need in the ways that they want to be served. We actually talked to an awful lot of credit unions that are actively involved in the financial inclusion space. And QCash was a name that kept coming up over and over again as really a wonderful alternative to payday lenders that kept our members within the credit union system, where both education and assistance are helpful, are available to help them break the cycle of predatory lending. And the QCash concept is proven and has been around a while. A number of our senior leaders had seen this, and it fit really well with our 5-year vision statement, which is do well to do good. And by that, we mean we want to be profitable so that we can make a difference in our community in ways that really are meaningful to the people who need help the most. And QCash for us embodied that philosophy.
That's great. Thank you, Dave. So with technology, implementation can sort of be that make it or break it moment. You want to get off to that great start and really drive the use, both inside the credit union and for your members. Can you talk a bit about the QCash implementation process? What was it like for you?
Absolutely. So we have a process at Intera that we refer to as our resource allocation committee. It meets monthly, and it looks at all of the enterprise-wide projects that we have going on at any given time. And we try to limit that to 10 enterprise-wide projects at any given moment. That brings all the resources and all the departments of the credit union to bear on an individual project like QCash that we're focused on. And I tell you that because at the end of every implementation, we do sort of a lessons learned. And the thing I heard back from every single member of the implementation team was that if they could, if we could have a partnership with a vendor partner like QCash sort of set the gold standard for what the implementation would be like. Because QCash actually does the algorithm and the decision making, the integration was actually really simple, and it remains an easy and effective process both for us and the membership in terms of getting loans in the way they delivered, in the way they want them, in the way they need them, in a really short time frame. So what our team said about the implementation is it really couldn't have gone any more smoothly. And it really has become, the QCash implementation has become the standard for what we are looking for when we onboard a new vendor. It was really a remarkable process for us, and we would highly recommend it to any other credit union that was interested in this type of small dollar lending program.
And Intera is one of actually several Inclusiv members using QCash. So I can add, as part of our vetting process for QCash, we reached out to several credit unions that had gone through implementation to talk to them about their experience, and we heard similar things. So that the experience of Intera is certainly not a one-off.
The only other thing I'd add about that, Peter, is our time frame was longer than 14 weeks, but I'll tell you that was because of our internal processes, not any holdups on the part of QCash. QCash actually accommodated our schedule and our rollout in a way that was also extremely helpful.
That's great. So Dave, from a product perspective, small dollar loans come with risk, especially if you're streamlining the underwriting. How does QCash or the QCash platform help Intera manage that risk?
Right. So, risk it's the business that we're in. Managing risk is why we're here. And I'll give you something to compare this to. our balance sheet looks a little different than most credit unions because we were originally a Farm Bureau credit union. So we're exempt from the member business lending cap. So about a third of our lending portfolio is agricultural and commercial loans. So we have perhaps a more diverse lending portfolio than a lot of credit unions. So, but it looks different. And you would think, in terms of managing risk, that making commercial loans and larger agricultural loans would bring a different degree of risk, and it does. But what I'll tell you is the total charge-off ratio for us for our entire loan portfolio, and that includes everything from mortgages to auto loans to QCash, is under 30 basis points. And it's not that we're not taking risk. I believe it is that we're actively managing it. And that's relevant for us because at this point, the risks that we're taking in making small dollar loans to our members that need it are different than the loans that we typically make. However, our experience so far has been very manageable. And I think that is a testament to the algorithm and the relationship lending process that QCash uses. We've done about $1.2 million in total loans in 3 months since we began this program, and our charge-offs are under 90 basis points total at this point. So what I think that the algorithm and the discipline that QCash provides for us really is a really effective tool in helping us meet people with significant needs where they're at in a way that is very manageable for us from a risk standpoint. And it allows us to make loans that we would not have otherwise been able to make given our traditional credit underwriting standards.
Dave, thank you so much. Your insight is incredibly appreciated. Thank you very much for sharing.
Absolutely, it's my pleasure.
So we've got a little under 20 minutes left, and we're going to transition to some Q&A with the audience. So I know we have several questions in the chat that I can go through, and then if you do have a question, please do raise your hand, and I can give you the opportunity to ask your question to the panel. So the first question from the chat is, of the credit unions offering QCash, do they also provide ODP and or courtesy pay, or is this an alternative to those?
So the answer to that question is yes and yes. And so our product works very complementary to ODP and courtesy pay. They're actually two very different things. But what we have started to see is some of our credit unions are viewing QCash as a NSF situation fixing opportunity. And what we mean by that is when a member goes NSF, you can easily send them a link to a QCash loan where they can get the funds into their account in under 60 seconds, which then allows them to have the funds to pay those bills. And then we also have an ODP partner that we can talk to you about as well. But for most of our credit unions, we operate symbiotically or in partnership or complementary to courtesy pay and ODP. The two work very well together.
Great. Thank you, Seth. I will add that the webinar will be available, a recording will be available, and we can, I believe we can share these slides through the Inclusiv website. Yep. Can't quite say when they'll be up, but give us a few days and we'll get that ready. Seth, obviously you talked about credit unions using QCash for CDFI certification and for lending. There are a growing number of credit unions who have a CRA requirement as well. Are you currently working with any on Community Reinvestment Act requirements?
So I'm going to see if Denise happens to know the answer to that one.
You know, I don't. And so, Peter, with CRA, isn't that a requirement for banks?
It is, but states out there, Connecticut, Illinois, and others are starting up their own requirements. So I think we will see a growing number who will be looking at services like QCash.
Well, and the great thing about CRA, I remember credit unions always did that, right? Which is why it wasn't imposed on us. But that's a great question. And I didn't know about those states. So thanks for that information. But I would imagine that, this would be a great thing for communities just because of the impact that it has. Everything we've talked about. Yeah. Thanks for that question.
Can you talk about the potentially Spanish language version of QCash?
Yeah, already exists. In fact, we have credit unions using it today. And so we do offer multilingual capabilities within our platform.
Great. I know you already addressed this a little bit, but just to sort of circle back, are interest rates on the QCash product decided on by the credit union? And if so, what's the current rate range you see with credit unions that are using QCash?
Yeah, absolutely. So that is the great part. Again, the credit union owns the loan and services the loan, so you're going to select the interest rate. So I have credit unions doing everything from a 4.5% loan to most of my federal credit unions are at the PAL2 limit of 28%. I do have one credit union that actually goes even higher than that. Now, it's one, but you're in full control. And the same thing with the application fee or the origination fee. The average application fee is $20 to $25, somewhere in there. But I've got one credit union that charges 10 and I've got one that charges 50. And so you're really going to be in control of your product. And our client success team is going to help you determine what the best outcomes are to accomplish your goals. So once we understand your goals, we'll be able to share with you how to accomplish them. But really the big next step for a credit union is when you reach out to us, we're going to just do a discovery call with you. We'll walk you through a demo, and we're going to have you sign an NDA. And then what we'll do is we'll give you a pro forma with actual pricing so that you can see different interest rates, what's your return on assets going to be, and how great this product's going to be, not only for your community, but also to your credit union.
And along those lines, what's the average loan amount that credit unions are making through QCash?
Yeah, great question. So the average loan amount is about $1,275 with an 8-month payback period.
Great. And I love that you have that exact number ready to go.
We watch it a lot. And just another comment. So our platform supports tiered payback periods. And what that means is based on the loan amount, you as the credit union can choose what the payback periods you want are. So somebody who gets a $500 loan is going to have a different payback period from a $1,500 loan.
Denise, this one is probably best for you. What was the most successful marketing strategy to get the word out to credit union members?
Well, it kind of varies from credit union to credit union, but I know the one big one that got a tremendous response did an e-blast, right? They just did a single e-blast to all of their members. Another thing we found that's super important is the positioning of QCash on the mobile, because if it's buried, you're not going to get as many clicks as that. We've had some really clever campaigns, and we've had some really clever names. We'd actually prefer they don't call it QCash, but there's all the naming part's fun for me, actually. But I would say it depends again on the credit union, because if they don't have a really good solid email list, that won't work for them. But in the case of one of our biggest successes was an e-blast to all the members, and it just shot up. Oh, and the great story, Seth, I don't think you told this one. One of the members there got a $500 loan and paid it off, and got a $500 loan and paid it off. And this is like right after they launched and did the big e-blast. And then he did a third one. So they reached out to him and they said, and he paid it off each time. And they said, we just want to know why you did that. He said, I couldn't believe it was so easy. So he was just playing around with the technology.
Easy is good. Easy is very good.
Yeah.
Peter, this is Dave. If I could, I'd like to respond to that question as well. So when we rolled this out in February, we only had a week or two in the end of February when it was available, and we didn't do any marketing for the soft rollout. We just let that happen. I think we had 30 loans in the first 10 or 12 days. And on March 1, our marketing department simply put a banner on our home banking page that simply said, do you have a small dollar lending need? Check out our, we call it Cash In. Everything for us with Intera has a capital IN for Indiana. And the web, that web banner by itself, before we did any other marketing, we approved over 500 loans in that next month just from the web banner. And then we've supplemented that with targeted email blasts. We didn't email everybody. We did some actually quite targeted next likely purchase, or who might be most likely to benefit from a loan like this, targeted emails that were also very successful.
Dave, a follow-up question for you. Have you, or do you, does the credit union look at folks that perhaps through their ACH, they're paying off a predatory lender? Are you looking at the number of those folks that are coming in through the QCash loan and getting away from the predatory lender?
So we have begun that, but I don't actually have any numbers today. But yes, we are on that journey. But I don't have those results yet.
Great. Well, we look forward to hearing more about that in the future. Another question from the chat. Is there any integration or relationship to credit unions' financial counseling initiatives? Great question.
Yeah, it is. And the answer is absolutely. So you as the credit union will know who got the QCash loan. And what a lot of our credit unions do is they use this as the opportunity to then reach out to see how they can best help that member from financial education and financial counseling. Now, the beautiful part about that is you've got the order correct. So if you think about Maslow's hierarchy of needs, right, it's you've got to meet the basic need before you can take on the next need. And if a member has an immediate need because they're dealing with a life event, what they don't want to hear is, well, let me counsel you on how to be smarter about your finances, and leave the need unmet. But because you met that need, they are so much more open to listening to you about those other things. And it really is a great front door, open door for you to be able to help your members with financial counseling and education.
Great. Thank you, Seth. There is another question that, Seth, I know you did touch on, but I think it's one that bears repeating because it's often probably the one that has the most confusion associated with it. So again, if you can talk about the credit union's ability to control rates and terms.
Sure. So each loan, so again, we recommend you build out 3. I've got credit unions with less than 3, credit unions with more than 3, but each loan can be completely independent when it comes to how much of a loan that person can get, the minimum and the maximum amounts, what interest rate you want to charge, what the payback periods are, and what all of the underwriting criteria are. So an example would be one of our credit unions, they did a 4.5% COVID loan. They relaxed the underwriting criteria and they lowered the maximum loan amount so that more people could get the help. But then I've got other credit unions that, they create, for example, a vacation loan where it has a little bit stricter underwriting criteria, but that loan amount can be $4,000 to $7,000. And so, the other thing to think about is if you're a federal credit union, for the life event loan, you are required to be in compliance with PAL2 guidelines, so a maximum of $2,000. But what our federal credit unions are doing is for the specialty loans and things like that, they're actually bringing the interest rate down to 17.99%, and they're able to then not be under the PAL2 guidelines, and they can give as much of a loan as they want. And so there's lots of opportunity for you to use the different loan products in very different ways.
That's really helpful. I think we're going to go with one more or maybe 2 more questions. Have you seen any impact on NSF or overdraft fees or utilization since introducing QCash? And Dave, I think it'd be great if you could answer that. And has this helped mitigate member overages on accounts?
So what we were expecting was an initial decline in our courtesy pay usage, and then an increase in both is what we were planning for. And what we saw was absolutely no decrease in our courtesy pay usage at all. And this is simply an additional need that was being met somewhere else outside the credit union. But there's been no impact at all on our courtesy pay usage or fees.
And that's really what we see as well. Now, again, you as the credit union, you have the capability to build awareness as a solution for overdraft if you choose to. But for the credit unions that don't, the two really do work complementary and are incremental to each other. But you could create a marketing campaign around your product being an overdraft protection solution, or you can choose not to.
And then I'm going to go with one final question. Can you, Seth and Denise and Dave, talk about how you make the interest charge, the overall amount a person will repay, visible or clear as they're going through that 6-click, 60-second loan application?
Yeah, so I'll just jump in really quick. When we show you the demo, you'll see it very clearly. But because we are a QSO and you're a credit union, because we use relational underwriting and not a black box, everything about our platform we make extremely clear to the member. So when a member clicks apply, the very first screen they see will have all of the underwriting criteria required for them to get the loan laid out. So it'll say, must be over 18 years of age, must be a member in good standing, must be a member for a minimum of 2 months, must have, and you can customize it. You can say, must have direct deposit, whatever you want it to say, but then it says loan details. And so then it'll say payback periods up to 36 months, interest rate, 28%. And so they're going to see it on the very first page before they ever get into what we would call the loan application, which isn't really an application, it's just e-consents. And then they're going to see it again because the very last thing they have to do before we fund is they're going to review and accept the Truth in Lending Act disclosure. We use your Truth in Lending Act disclosure and populate all of the fields. And so they're going to see it a second time before they ever agree to that loan. And that Truth in Lending Act disclosure is what we call a double opt-in, meaning they have to click a box and opt into a box, and they have to click a CTA saying accept. And again, those things hold up in court just like DocuSigns do, and there's a reason why we do what we do. But it's for that reason, so that the member is painfully clear and aware of all of the loan terms, the criteria, but especially that interest rate. So Dave, you guys doing anything differently?
No, we're not doing anything differently. The only caveat for us is we are state chartered. So the regulator for us is the Department of Financial Institutions, and Indiana has some small dollar lending laws that we had to comply with. But no, we're doing exactly as Seth described.
Great. Well, Dave, Seth, Denise, thank you very much for your time. I know I learned more than I did every time I hear about QCash. I learned something new. And I know that there are a lot of folks who are interested to learn more. If you would like to learn more about QCash, please do reach out to them at info@qcashfinancial.com. I will put a plug in for the Inclusive Innovation Council if you are interested in how you can perhaps become involved. It is a group that meets quarterly, and we would love to have more technology leaders from our credit unions involved. Please do reach out to me at prubenstein@inclusiv.org. You can also go to the Inclusiv website, and the staff page has my information there as well.
Awesome. Well, guys, thank you so much for attending today. Please reach out to us at info@qcashfinancial.com, and you will guarantee hear from Denise.
Good to see everybody.
Thank you, everyone.
Thank you.
Bye.
Thank you, Dave.
My pleasure. Thank you.